Hey, how you doing? This is Adam Post, publisher of more than 1,000 comic books and marketing expert covering the woke shutdown of big companies. Boycotts are creating panic as companies are dropping the propaganda. Let's get into the story. Before we do, please be sure you are subscribed to the channel. Click the bell for notifications. Give me a thumbs up. I really appreciate you guys. Coming from Newsmax, consumers rise up against woke agendas. Coming from Daily Mail, anti-woke boycotts pay off. Bosses at top firms cut earnings call mentions of diversity, equity, and inclusion and sustainability by 31% in a year as Budlight and Target see shares slump over their pro-trans campaign. From Forbes, can brands buy back consumer trust? Because brands are losing their consumer trust by pulling this ridiculous woke agenda stuff, and now they're trying to figure out how to win back consumers. And even in the elections, from the Daily Mail, could Biden's support for electric cars tank his re-election? Woke EVs are now political football, Ford boss warns as Trump vows to back gasoline engines. From Newsmax, consumers rise up against woke agendas. From the Daily Mail, anti-woke boycotts pay off. Companies appear to finally be coming to the conclusion that going woke could mean going broke, or at least see their share price fall to uncomfortable levels. An analysis of earnings calls has seen a sudden and rapid fall when it comes to firms mentioning the terms of diversity, equity, and inclusion, green and social initiatives, and sustainability in quarterly calls to investors. Of course, the reason for this is that consumers don't want to hear about this, investors don't want to hear about this, and when a company is busy talking about sustainability or diversity and equity, the investors know that these companies are not focused on making money and building their business. While they're focused on agendas, their competitors are focused on taking away their business. There were close to 1,000 mentions of such clauses in earnings calls until the start of the first quarter of 2022. By the second quarter of 2023, the space of 15 months, the number appears to have almost halved, with 575 mentions of these woke terms. There was a 31% drop in mentions of woke issues during earnings in the most recent quarter compared to the same earnings period last year, according to the Wall Street Journal. In two of the most high-profile cases in recent months, both Target and Bud Light have borne the brunt of what it means to upset their loyal customer base and ultimately their investors as the share price for both plunge. It now appears that increasing pressure from conservative activists and investors is sparking a change in strategy. Investors want companies to focus on their core business operations rather than to be seen as doing some kind of social good. When it comes to issues of sustainability, the electronic signature firm DocuSign, with a market capitalization of $11 billion, announced its carbon neutral status in March of 2022. With plans to achieve net zero emissions by 2050. But there has not been a single mention by company executives, including Chief Financial Officer Cynthia Gaylor, of any of the previously discussed sustainability initiatives, carbon neutral status, or net zero emissions during earnings calls. Gaylor stepped down as CFO of the company. The company has not given a reason for the change, but insists they still invest in environmental, social, and governance programs regularly, updating investors on their initiatives. DocuSign say they are continuing efforts to reach net zero emissions no later than 2050. Thank goodness. Data from the earnings calls gathered by AlphaSense say executives mentioned the terms 31% fewer on earnings calls from April 1st to June 5th of this year compared to 2022. The drop is a marked shift when companies would normally tout such initiatives as a selling point and one that might attract investors. It is the largest year-over-year decline in the last 5 quarters, following a surge on such topics following the death of George Floyd in May 2020. Chief financial officers, who are the ones who often oversee sustainability and diversity efforts, have also seen the mention of such topics fall. CFOs at US-listed companies mentioned ESG, sustainability, and related matters on 30% fewer calls compared to the same time period from the previous year. Quote, the easiest thing to do is to just stay out of the conversation and emphasize other facets of business that are going to be perceived as less controversial and more core to the traditional metrics of the business, said Jason Jay, a senior lecturer of sustainability at Massachusetts Institute of Technology, to the Wall Street Journal. While these companies are avoiding discussing divisive issues as part of a larger strategy, they still may very well be working on woke agendas in the background. They're certainly not going to be advertising it up front, and then as more shareholders start to challenge them and say, hey, what are you actually doing to increase the share price? We'll likely see even more change and more pullback from these ridiculous agendas. If you look at the stock of Bud Light since before the boycott and where they're at right now, while the stock bounced back a little bit in the past, it's now below where it was at any other point during its crash after the Dylan Mulvaney promotion from April 1st. This company is down around $29 billion from where it was right before the Dylan Mulvaney promotion. If you look at Target, they've lost a full 1/3 of their value, even worse results than what happened to the Anheuser-Busch stock over Bud Light. Target started out at $74 billion before their big LGBT Pride Month promotion. Now they're down to $50 billion. That's a huge, huge loss in value. The worst, of course, is Disney, who's lost more than $218 billion from their 2021 high in their stock value as they get pounded and pounded with failing movie after failing movie and one disaster after another. Consumers have been rising up to push back against the woke agendas from the companies. And coming from Newsmax, as Anheuser-Busch, Disney, and Target have taken their liberal agendas to the extreme, conservatives have pushed back, punishing these companies with boycotts, costing them millions of dollars in sales and billions in the market capitalization of their stock. Some economists, money managers, and business leaders think this is just the beginning of even greater influence wielding by consumers, and that more lawsuits challenging the legality of environmental, social, and governance, diversity, equity, and inclusion, critical race theory, and other liberal agendas are coming. Having witnessed the Bud Light and Target boycotts gain national attention and damage those companies' reputations and bottom lines, corporations that have audaciously ignored hundreds of millions of consumers, or by party lines, half of America, will now have to think twice about rejecting conservative values, says Stephen Padfield, an associate of the National Center for Public Policy Research Free Enterprise Project. Some conservatives believe the Bud Light boycott, which has cost the parent company Anheuser-Busch now $29 billion in market value, is a watershed moment. Some conservatives believe the Bud Light boycott, which has cost parent company Anheuser-Busch $29 billion so far, is a watershed moment. Quote, the pendulum is starting to swing back away from wokeness to a more moderate approach, says Michael Busler, a public policy analyst and a professor of finance at Stockton University. I agree. It looks like it's coming back to the middle. Hopefully it never goes back anywhere near where it used to be. All we need companies to do is focus on what they can do for us in exchange for the money we're willing to give them. The rest we do not need. There are signs that the anti-woke backlash is just beginning and may continue all the way through the November 2024 presidential elections. Well, we can follow the model of ESG proponents that bullies corporate managers to comply with their beliefs by boycotting their goods and divesting ownership of their stocks, says Bill Flake, CEO of Ridgeline Research, manager of the American Conservative Values Exchange Traded Fund. While the media would have one believe that the majority of Americans overwhelmingly support companies espousing social causes, the numbers are smaller than we might suspect, given how vocal the left is and its laser focus on social and cultural issues. A recent Gallup poll shows only 25% of Americans identify as politically liberal. Quote, considering the left's inherent hypocrisy and virtue signaling, Blake estimates the figure may only be 5% are radicalized. Most consumers and investors really only care about the quality of the goods and service they purchase and the return on their investments, Padfield says. Quote, we believe in capitalism as the best way to lift up all boats, but that corporations in the US and elsewhere not only have gotten overly politicized, but in some cases that they have broken the law with DEI, says Padfield. They absolutely have. His organization advocates for conservative objectives at publicly traded companies. Quote, a parallel economy is rising, where consumers are increasingly able to buy products from companies whose ideals are aligned with theirs, says Joe Vaboril, who handled conservative online marketplace Public Square's initial public offering. The commercial opportunity to serve those customers is not in billions, it's in trillions of dollars. Following the Supreme Court striking down affirmative action in college admissions, lawsuits against companies' DEI policies that discriminate against various ethnic groups, including whites, have begun to proliferate. So has ESG litigation. Shareholders, pension plans, governors, and conservative groups such as the Heritage Foundation have begun suing investment management companies and state pensions for putting ESG ideals ahead of their fiduciary duty to deliver the best possible returns for their investors. The Department of Labor in November ruled that a 401k retirement plan may consider ESG factors, this is the fault of the Biden administration, when selecting their investment lineup, but does not require them to do so. Performance research has shown that ESG funds underperform traditional benchmarks, which of course they would, because if you apply ESG criteria, you're not applying results-based criteria. You can't say, I'm going to support this company because I like their political agenda with other people's pension fund money. I mean, this is how insane these things have gotten. Because of the Biden administration, they did push through a rule that allows retirement plans to consider ESG factors. Still, it doesn't get them off the hook for their fiduciary responsibility, so there's an obvious conflict there, and that's where lawsuits are coming from. The Heritage Foundation and the American Legislative Exchange Council have asked state legislatures to restrict or ban ESG and other social cause screens in corporate investments. In addition, governors in Arkansas, Florida, Kentucky, Montana, West Virginia, and Utah signed state laws restricting using ESG as an objective in pension funds. Why have so many Fortune 500 companies embraced liberal policies? These have gone so far as to give employers abortion benefits, integrate LGBT Pride Month and ESG into advertising and product campaigns, deplatform or censor conservatives on social media, back Black Lives Matter, endorse sanctuary cities and illegal migrants, and sound alarms over climate change. Conservative commentators say it traces back to colleges and universities being run by liberal elites, politicians kowtowing to social agendas, and CEOs folding in the face of increasingly strident stakeholder capitalism. All thanks to Larry Fink pushing that aggressively through BlackRock and others like him. Well, the debate over corporate social responsibility has been going on for decades, but the shift has been much greater since Joe Biden took office, Bushler says. An earlier critical turning point was the Occupy Wall Street movement of 2011, Padfield says. The bankers saw the pitchforks coming for them and looked for ways to appease the radicals, he says, making ESG, CRT, and DEI policies formal corporate goals signal to the anti-capitalist activists, we will join you, so point your pitchforks elsewhere. This is not the first time conservatives have thrown down the gauntlet. Quote, on the other side of the argument, cemented in an op-ed by Milton Friedman in the New York Times on September 13, 1970, Bushler continues, is that the primary or only function of business is to increase profits. As to why American businesses are espousing liberal objectives that they know are impossible, like Biden's net zero fossil fuel emissions by 2050, Peter Huntsman, CEO and chairman of chemical manufacturer Huntsman Corp., believes it's because they lack the courage and the leadership to stand up to the left or laud the accomplishments America has made becoming more diverse and reducing pollutants. Quote, today we're emitting roughly 6,500 metric tons of CO2, same thing we were emitting in 1970, Huntsman told the Wall Street Journal. And look how much more electricity we're using, and look how many more transportation and miles we're driving. We've expanded the economy 30 times over nearly, and core CO2 has stayed flat. We should be celebrating this achievement, shouldn't we? Holding up a plastic water bottle, Huntsman added, we can make 10 of these for the amount of plastic we used in one of them a decade ago. I don't know why we don't celebrate these accomplishments. Of course, he's right. It's because you're not dealing with a legitimate opposition. You're dealing with an opposition that just wants an excuse to have control and deindustrialize all of Western civilization. As for companies becoming more diverse, between 1999 and 2019, the number of people of color and women in the U.S. workforce grew by 26% and 18.5% respectively, according to data from job website Zippia. Strides have also been made in the representation of minorities in the C-suite, though more work needs to be done. Black Americans make up 13.6% of the U.S. population, according to the U.S. Census Bureau, but are just 5.9% of all CEOs in the U.S., according to the Bureau of Labor Statistics. For me, I'm only concerned with people's merit. I don't care what they look like. I don't care what their age is. I only care if they're the right person for the job based on their actual legitimate qualifications, their attitude, and their reliability. It's high time, Huntsman believes, for corporate leaders, politicians, and the public to celebrate American exceptionalism and to stand up against the vociferous cancellation orthodoxy. Political activism by Disney and other woke corporations, quote, certainly is not being driven by what consumers want, agrees John Schwepp, Director of Policy and Government Affairs for the American Principles Project. According to one study, nearly 70% of America's CEOs affiliate themselves with the Republican Party. But because our education system almost exclusively produces loud, angry left-wing zealots, these CEOs have no choice but to surround themselves with these kinds of people, Schwepp wrote in a Newsweek opinion piece. Failure to please these ideologies would pose an existential threat to the CEO's livelihood. Since CEOs won't stand up to woke agendas, institutional stockholders at investment management firms and pension funds and retail investors can step into the void and make an impact, Bustler says. Quote, consumers have plenty of recourse if they think the policies or the politics at the companies where they shop have gone awry. Another important consideration: goods and services cost more at companies that layer liberal policies on top of their sales targets, Bustler says. So consumers ultimately can and should vote their dollars at the register. The bottom line, Patfield says, is that corporations will have to think twice about promoting cultural Marxism and rejecting conservative values, or at the very least, give the appearance of at least being willing to engage with conservatives. Blake sums up the current conservative movement this way, quote, if I tie everything back to investing and maximizing shareholder returns, ultimately we believe in meritocracy. Let me know what you think of all this in the comments below. Always love to see your ideas. Please be sure you are subscribed to the channel. Click the bell for notifications, give me a thumbs up, and I'll see you again soon with another video. And if I don't see you, I will miss you.